Alright, time once again, one will be making an update on the situation of BTC USD to see what kind of opportunities lies ahead of us in the market and how we can be capitalizing on these potential moves. And on that note, I say welcome traders. Time to make an analysis of this market, but before we do that, first of all, the risk disclaimer explaining that trading foreign exchange and the global financial market is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and I do thank you for your time on that. Alright, so the pair we are looking at right now is BTC USD, and we can see clearly how that the market has just been exploding to the upside without even giving us any kind of structure at all. In fact, the last structure that we had dates back to this area, where this area acted as a resistance, again from here acting as a resistance, and then eventually breaking up to the upside, retesting this broken area, which now became a support here, before rejecting it impulsively to the upside. So at the moment, everything looks very clear from the monthly perspective, except that we do not have any kind of structure at all to work with. Going down into the weekly time frame, what do we have now? From a weekly perspective, we can see that the market has made this nice impulse correction again from here, an impulse again, then a correction, and we just made a new ATH, that's a new all-time high here. So the market is already preparing to make possibly another rally up again. Now, generally speaking, after an impulse and a correction, if you want to measure the correction, what you can do is to take your Fibonacci retracement to and measure from the low of the impulse leg to the high of the impulse leg, and we can see here that the market has just retraced to the 50% Fibonacci level. So for those of you who do not understand what Fibonacci retracement tool is, it's a tool that we use in finding out entry points. Fibonacci is also a tool that we use in placing stop losses, and it's a tool that we use in finding possible target areas for setting take profits. Okay, so as much as possible, I'll try and make a video in the coming days showing you how to use properly the Fibonacci retracement tool. So from a weekly perspective also, we can see that everything looks very clear. Moving down into the daily time frame, what do we have now? I'd made an update a couple of days ago saying that we wanted to see price retrace from here. When the price was here, I made an update saying that if price will retrace to this region, why this zone? Because this was the area that acted as a resistance before breaking to the upside. But price eventually did not get to that level. It just made this small it just retraced a little bit here, but this is even a good thing because now we can see that this is actually a strong demand area. This area here, it's a strong demand area, which of course we do expect that price is going to retest again before continuing to the upside, and we can see that price is already doing that right now. So why is this area a strong demand area? Because we can see that from this move up here, there is only one candle that is not related to the move, which is this red candle here. Every other candle is green, so this makes this area a strong demand area. So we do expect that at some point in time the markets will retrace to this region and then continue to the upside. Now we can from our monthly, weekly, and daily time frame, we've been able to analyze that we do expect some rally to the upside. However, how can we be capitalizing on this opportunity, and how do we enter or how do we set up our trades? Well, the way to do that is to begin to monitor things from the 4-hour and the 1-hour perspective. Why? Because the monthly, weekly, and daily time frame is better off when it comes to finding out the direction of the market. But when it comes to confirmation and entries, the better time frames will be the intraday time frames. Of course, in this case, the 4-hour and the 1-hour time frame. So right now we do have price already rallying, already making a correction to this demand area we had already um taken note of. So what we'll be doing right now is monitoring price as it's making this correction to the downside here. And if price will shift from a 4-hour bearish market into a 4-hour bullish market, inside this area is where we will be capitalizing on our moves to go on that longing opportunities. And if price will shift, like I said, from a bearish to a bullish market, then we will be taking this nice long and retargeting this area here. While this area now, because from a weekly, let me just quickly show you that using the Fibonacci retracement tool. Now if we draw our fib again, we can see here that from here, which was the high, and to this point, which was the low, if we do reverse our Fibonacci to find out possible target areas, now we can see that this area, which is the minus 272 level, will be the first target area, which coincides with about the 66,000 level. So this is the first area we do expect price to rally to, and even possibly to the 76,000 level, which is the minus 618 Fibonacci retracement level. So guys, this is how we'll be approaching this trade. And if you do have any comments or you do have any questions, feel free to let me know. Cheers, and catch you in my next update.